Moving now on to Foschini, and I do admit we're doing a bit of a gear change, but understand the theory here is we're still talking luxury goods, and Foschini is in fact a major player in the fashion and jewellery retail environment, in particular with their Stearns and American Swiss business. Something of a contributor, not enormous to the overall business, but we'll go into some of that sort of detail. Remember, Foschini is market cap-wise about 38 billion rands worth of market cap. There you go, that's right. Price to earnings ratio in line with most of the retailers, below 20, and a dividend yield of 3.08. So interesting business, Mia. They also did a fairly significant acquisition in the UK recently, right?
Yes, they did. Also, the thing that bothers me about them is their credit book. So they've always had a decent sized credit book, and we know the health of the consumer in South Africa, and we know what interest rates are going to do. So from that point, I'm not surprised that Byron sold it out last week.
Okay, we'll go into the reasons for that in a minute, but they did do a reduction of their net credit activities because they sold that RCS business out to BNP Paribas or something. And I did see that in their recent results, they're now doing cash sales for about 45% of their stuff through the tills. But yes, you're right. I mean, there's a store car credit operation, so there's that sort of earnings volatility, and we know that if they're not offering credit, often their clients are getting credit from somewhere else.
That's right. So the clients that shop at a company or at a store like Foschini's and all the subsidiaries like Stearns and American Express, or American Swiss rather, you know, that's more the middle class to the lower income earner, and those sort of people generally buy these luxury goods on credit, which is a worry for me. I think I know they've done particularly well. If you compare their performance over the last year to the rest of the retailers,
let's talk about that. Let's get that chart up, and you can see that. Yeah, there we go.
So they've had a total return over this last year of over 70%, which is absolutely impressive.
So what was that? Was it just a sense maybe they'd been a little bit oversold, underappreciated? Yes. Doug Murray's guys, the international acquisition.
Absolutely. Came from a very low base and then, you know, just outperformed the rest of the sector to an extent. I prefer more of a cash sort of driven, sales driven companies when it comes to this sector, or something completely different like a Woolies. I don't think I'd go for Foschini's just due to the fact that they are focused on Stearns and American Swiss.
Yeah. Look, to be fair, one of the reasons why Byron said that he lowered the position was he didn't have a high conviction, the stock had done well, and the feeling was that we had in our portfolio for various reasons a whole slew of consumer exposures, including Woolies. So he kind of felt, well, look, this is an opportunity to free up a bit of cash in the portfolio, which had been a problem for us up till date.
True.
Okay, so hot or not on this one?
I'm going to go with not hot.
Look, I like the team. I also have a personal friend, Anthony Thunstrom, who's just taken over as the CFO from, Ronnie Stein, who'd been in that job for a long time. He's also taken on the management of the credit book in question. I like the story. I think they're well positioned. I like these retailers. I think the South African consumer is going to be okay. So I'm going to remain hot on them, even though I do accept that at that share price, it does look like it's fairly high.